Yo, hello guys, my name is Dima and today I will show you how I made $8,000 again trading Great British Pound today. And I don't usually trade this pair, but that was some nice entry and I will show you now how I trade. So it was quite easy. Actually, all my trades and all my recaps are in our Discord server. It's over here. Yeah, it's called CO Trading, and here is my link. Here is link of my partner Andrew, and we are looking for someone else to join our Discord as a mentor as well. And we give some ideas, some trades and stuff, so you can guys follow. So let's continue with Great British Pound. I don't usually trade it, but this was something really nice that was given for us on the graph. So let's start from the weekly time frame. And we swapped this liquidity over here. This is the yearly high. So we should get some sort of reaction to the short. And here is our zone, which I want to see the test. So this is daily fair value gap, which is strong and which was fulfilled with the price. So when I see this type of models, when the price is going all the way up, sweep some high pool liquidity, after that came back to test, and this test is inside this daily fair value gap. This what I called some zone where I looking for the entries. So I want to look for the longs. So let's remember that we are in the daily time frame, and let's see where we can target. So where we can put our take profit. Our take profit can be put in somewhere here, yeah, inside this fair value gap, or it can be placed on this high, which is previous weekly high. Yes, so let's go further. We remember that we are inside daily fair value gap. This is fulfill, yeah, and here is the order flow confirmation, which we can see that the price is most likely going to reverse, and we are going longs now. So first of all, what I want to see on the graph is how the price start to accumulate over here. And I want to see what the session is this, because for the Forex and like for the currencies, it's nice to see how the price work with the borders of the sessions. For example, the Asia session low and high, it's strong liquidity pools which give the reaction. And here is the example when the price hits the Asian low over here. This is the equal lows of the Asia and gave us the reaction. So where is the reaction will be? The reaction will be here with this inversion fair value gap placed, and after that I want the price to give me the confirmation like a boss, break of structure. So two things. After that I will target into the daily fractal over here, or I will target here, for example, yeah, the beginning of the fair value gap for hours. So this is HTF POE, so this is a high time frame POE, which I was targeting, and now I want to enter the position. So first of all, I have the liquidity sweep over here, yeah, the Asian session lows are swept. After that, we have the inversion fair value gap, and this is the model which I enter the most. Because when we have some high time frame POE, which work with the liquidity, and swept the Asian low, after that gave us the inversion. Inversions, you should understand that inversions is like the same amount of volume put into the market, but from the other side. So this was down gold candle, yeah, and this is uptrend. So this was the first position that I took. After that, I was waiting for the price to give me the test. And here I get another fractal swept. Yeah, this is the liquidity sweep. Here is one more. So you can see how the price swept its own liquidity just to get some power to go long. And here is the swap number 3. Actually, I opened like 3 trades. One more opens here, yeah, after the liquidity swap. Targets the same, and this was really tough move because it was so fast and so big volume was put into this move, like short move. So I thought it's going to be a stop loss, but whatever, it wouldn't. And here was the full fix of my position. Why here? Because it wasn't enough amount which was putting into position like $8.5 thousand dollars self-deposit, so I don't trade on prop firms. But the point is I put 0.5, 0.5 and 1 more percent of the risk into these trades, because after I put it 1% here, my stop losses already was taken to this level over here. I will show you. So basically I don't want the price to test it no more, because this was the lowest point of the correction, and if there would be some other points, I believe that's going to be a short move, so no longs. So basically this is how I work usually. I usually add more margin to the position if I see how the trend works into my way. And here is the good example when the price starts to hit the fractals of the liquidity and pull back. So this pullback over here, this one almost with the break of structure, and this was the final one, and this is the break of structure. So for now, for example, I'm looking mostly for longs to this point, because this also synchronized with the daily time frame fair value gap. So exactly the same situation as we spoke before. Here is inversion fair value gap daily. So this is high time frame POI, and this is the fractal inside this POI. So we are targeting exactly this fractal over here and looking for the reaction, because it's always possible that we go downtrend again because of this liquidity swap. Maybe it was our main target. So thank you guys for watching. Thank you for your attention, and see you soon.